Don't let stock of General Motors take you for a ride. The Street's technical analyst Bruce Kamich is here. Bruce, you're a bit concerned that the recent rally in GM shares is actually going to sputter a little bit. What are you seeing in the charts that gives you that indication?
Well, I started thinking about it over the weekend. Like other investors, I like to read Barron's over a nice cup of coffee on Saturday morning. And they had a bullish story about General Motors and a very small chart. And I said, let me look a little closer and see what the chart says to me. So we have this one here, a daily chart going back a number of months. And it's had a rally the past 2 months as the market in general has recovered. And it did break out over its August highs, which is positive, but it's back to an area where it's failed for a number of months. Everything above 36, 37, 38 has been a problem for it.
We have a momentum chart too, so that is also going to tell part of the story.
Okay, momentum is a leading indicator. If you think of driving a car, if you know how to use a stick shift, you have to downshift before you make a turn. And price momentum will peak before the actual price does. And that's what we've been seeing here, that even though General Motors made a new high in here, it had 2 attempts to get through 36 in the past couple weeks, but its rate of change, its momentum has been slowing. So it's been downshifting, I'll use a pun there, in front of the $36 area. So it's suggesting that it's struggling. It had a very strong rally here, and then it took an additional amount of time just to get back to the same level. So it's weakening in its momentum, and that usually foreshadows a decline.
So let's go back 3 years and see what the past might tell us about the future here.
Okay, so it's not just the most recent rally that had a problem getting above 36, 38. It's had it for a number of occasions back in 2013, 14. Every time it's been up in this area, it's failed, and it's actually made slightly lower highs over this time period. So can it get through here? I don't think so. That's the story out of Barron's, so it's more likely we're going to see a pullback in this, and it looks similar in some of the other automakers too.
And in terms of a possible pullback, to what level? If we look at that chart, we're looking at below 28 there for the last pullback. Would it be a similar decline potentially?
Probably to 29. I don't think we'll go down there to those lows again until we're well into next year.
All right. Well, interesting stuff as always, Bruce.
And just one other point. Very popular indicator a lot of technicians and amateurs use is the stochastic indicator. And this shows where in the range did the stock close. Did it close in the upper fifth, the top quintile, or the lower quintile? And when a market gets near a top, people have found that it tends to have closes clustered near the highs of the day, or the highs of the week in this case. And that's what we've done. We have General Motors closing near the high of the week, and that indicates it's relatively overbought. It's gone too far too fast. And so combining that with a kind of a flat moving average, it all points to a sputtering of the rally.
Going in reverse, as they might say, right? Bruce, thanks so much. Good to see you again.
Okay.
I'm Rhonda Schaffler for The Street.